All right, good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy Thursday, and congratulations on surviving the most important CPI of our lifetime. I say that a little bit sarcastically, but if you're going to be reading social media and watching financial news coverage, that's definitely the way things were portrayed here in the last, say, 45 minutes or so. From like a market perspective there yesterday, right? We finally did get a breakout away from sort of that consolidation we've been stuck in here for the last little bit, but it didn't really happen on a significant volume standard, right? So there are some reasons for us to be a little bit skeptical of that being like a personality change inside the market, and going to be waiting, right, for some of that volume to show back up here before I'm confident that we have a separation away from some of that chop. Yesterday was a good trading day, right? Had two nice wins there in the morning, and then played that fake out scenario that we talked about inside the Discord and in the stream there yesterday during Power Hour. Shared that trade right inside Discord. And yeah, was a great opportunity, right? That maybe made a little bit of a mistake on. But essentially, the idea here, right, is here's your high volume confirmation, high vol breakout above high of day, so separation away from that range. And then you want to see basically that low fail. So once that low fails, basically we've seen bears attempt to reclaim control right under. They were unable to do so. And then once you see bulls, right, step back in after that candle, right, which is then that, say, 1510 candle, right, or that 310 candle, we know that you have a relatively clear path higher, and you can look for a continuation narrative here to the upside with then a stop loss here at this low. So the idea here basically, right, is once you have that separation away from the opening range, that breakout to establish a new high of day, you basically want to see bears fail, right, on a breakdown under your confirmation candle low. And then when they bounce back up, right, close back above that confirmation low stop loss, you know that, hey, the low is probably in within this sort of setups range. And you can look for a continuation story back up towards 5,500 or whatever you might want to target. So that's how I played that trade there in the afternoon. We'll see if we get another opportunity like that here today, either in the morning session or during Power Hour, and we'll go from there. Someone was asking me yesterday about streaming or doing more content during Power Hour. For sure would be something that I would like to do, but I can't do both one-on-one calls and stream during Power Hour, right? So I kind of have to pick between doing one or the other. So if you guys want to do, Power Hour, more Power Hour content, cool, but that'll be at the cost of doing one-on-one calls. Just don't have the capacity to be able to do both at once, or to extend that period significantly more than what I have already. So if I do continue, it'll be just trades the same way that I have or done yesterday. Post a screenshot of the setup of it coming together, and then give everyone sort of the opportunity to decide what they want to do from there. So with that being said, let's kind of figure out what we want to do here this morning, right? Set ourselves up for what should hopefully be a successful trading day. And then we can start to absolutely kind of rebuild, right, some of that confidence and keep compounding on what was a great little bounce back day there yesterday. So good morning, Craig, Raim, Devin, Steven, Brett, Solstein, John, Ruben, Bergs, Bugs, Brian, Suresh, Daniel, Vitali, Jeremy, and Tanja. Hope you're all having yourselves a strong start to the day here. And then let's get after it. So good morning, Tamara. So first things first, right? Check the economic calendar here. So again, we had jobless claims, CPI, fine. We've got some Fed speak here starting in 10 minutes. We got some more Fed speak here at 10, then 10:30, and then 11. So a relatively busy day for these Fed speakers. They are racking up. They're racking up here their speaking fees, right? So let's see if we can go from there. So first things first, what's the count here on ES? Let's start there. And then, yeah, let's take it to the next level here. So what's the count on ES? And then let's break it down. Yeah, spot on, right? So green candle, decreasing volume, gap down, right? So only one of those elements is telling us that bulls are in control here this morning. And we'd like to see, obviously, a relatively high vol breakout, right? Show back up here and push things higher. Now, if we're going to be looking for, that fake out scenario, right? Bounce off of yesterday's trend line, right? That 805 area, that 800 area would be a relatively reasonable target for then breaking back out towards that 5,850. So that would be sort of the starting point here for any analysis. And again, we're going to call this weak trending price action post breakout. I was going to say post breakup there. Breakup with the chop maybe. And we're going to go fake out off of like 5,800. So find support off of that range and then break out towards 5,850. So that's going to be the starting point here. And then if we get back up above all-time highs on volume, and not to say that we don't have any reasons to be pessimistic, but it gives us less reasons to think that we need to sell, right? Because everyone who's going to be holding positions is going to be profitable. So unless you're playing some crazy option exposure or something along those lines, that's a good spot here for pretty much everyone. And yeah, going to be curious to see if we can get some nice follow through. And then to the downside here, what would be like a reasonable fake out? So if we're playing a fake out, right, we'd want to see it basically fail a breakout back up above all-time highs. So we'd like to see basically that like 5,850 area reject and then push us back down towards sort of yesterday's lows. So if we're going to still continue to consolidate, right, inside yesterday's range, then that's not exactly a huge sign of strength from bears until we make a breakdown here under this low. But if we can get a fake out above and then push down towards those lows, then we have bulls trapped and we can look for that continuation narrative. So we'll call it ORB fake out around ATH. Good morning, Ben. Then break down towards yesterday's low of day, which is 57.80. And then under 57.80, right, we're going to go down towards like 57.20. So idea with the fake out, right, is we're asking ourselves, where's the point where bulls are trapped? Where's the point where bears are trapped? Good morning, Howell. All right. NQ. How are we feeling about this? Similar, not so similar? Yeah, very similar story as ES, right? Consolidating inside that breakout range. Breakout occurred on a disappointing volume standard. So 1 out of 3 here to the upside. We'll call it weak trending price action. And then same thing, right? We're looking for a bounce off of that trend line area. So we'll call it like 2,300. And then ORB breakout towards 25, right? Would be the starting point. And then to the downside here, right? You're looking for a move down towards like 22 or a fake out, right? Basically at this Thursday, the 26th high. Good morning, Troy. So fake out at 2,500. And then the target, right, is 22. And then we've got it kind of mapped out from there. Make sense? Make sense, team? Yes, no, maybe? All right, cool. Crude, what's the count? Yeah, red candle, decreasing volume, gap up. So it looks like a little bit of a possible bearish failure here. And then just sanity check, right? Calendar. Nat gas storage should be fine. So bull case, right? You're looking for a breakout towards 75 and then up towards like 77.50. And then fake out around, we'll say 72.50. Cool, right? So $2 move, plenty of space. And then to the downside here, right, you're looking for basically a rejection off of 75 and then targeting a move down towards like 71.50. Good morning, Brian. right, sweet. Apple, green candle. Let's get rid of this. Green candle, increasing volume, gap down, opening up in the upper third, but barely. It's a 2 out of 3 here to the upside with non-outlier volume. So you're looking for a 230 breakout here. And then because that's non-outlier volume, I wouldn't really trust dip buys inside that range. And we'll look still for that breakdown under the channel if we get it, but that's a day or two away. Okay, Tesla, red candle, increasing volume, gap up. So 2 out of 3 here to the downside. Good morning, SG. Okay, and you're still looking for, I kind of see this as a trend line. Right, something like that. So you'd want to see a breakdown under 237 or a breakout above 247. Okay, Microsoft, green candle, decreasing volume, gap down. Not a great candle shape either, so we'll call this a weak 1 out of 3 here to the upside, right? And it's weak because of the candle shape, not because of anything else. So you're looking for a breakout over 421 or a breakdown here under 414. Okay, Amazon, pretty big gap up here considering the volume standard that we've established. Green candle, just less volume, and then a gap up. So 2 out of 3 here to the upside without volume. And you're looking for a 188 breakout realistically, right? And then to the downside here, basically be a gap fill. Okay, AMD, red candle, decreasing volume, gap down, higher high, higher low, sorry, lower low. So it's a 2 out of 3 here to the downside without volume, and it's an indecisive candle, right? Because it gave us both bullish characteristics and bearish characteristics. So we need to see some sort of continuation. We're looking for what, a 169.50 breakdown. Right, and then to the upside here above 174. Okay, NVIDIA, higher high, higher low. Red candle, decreasing volume, gap down. So again, 2 out of 3 here to the downside without volume. And we'll call this a weak 2 out of 3, right? Because we know that a lot of that is dip buyers, right? So we're looking for support, probably realistically a little bit lower, not quite inside Tuesday's range. So this is a breakout or bust scenario here for bulls. So still a 135 breakout and then under a 129.50 area for a breakdown. Okay, Meta, red candle, weak red candle, increasing volume, non-outlier, gap down, opening up in the implied middle. I'm going to say this is setting up as an inside bar, right? So I'm going to go NA in both directions. Cool. All right, Netflix. Really weak volume, right? All things considered. Green candle, broke out above that ascending wedge pattern, but didn't do so on volume, right? And that's been a general theme that we've seen here. Right, it's just not something that we're seeing here until we get that volume, right? So very similar narrative that we're seeing on NQ and ES, where we're also getting those pattern breakouts, but those pattern breakouts aren't occurring with a significant volume standard. So again, this is a 1 out of 3 here to the upside. We're looking for that ascending wedge breakout. Now it's going to be a breakout over 730. And then to the downside, still needs to lose that trend line here to the lower end before I'm willing to be aggressive to the downside. All right, Google reminds me a bit of Meta, but this is our first like really outlier volume candle that we've seen here so far today. This is still a little bit of a weaker candle shape, right? Bottom wick is bigger than the body, and it's bigger than the top wick. So we are going to call this a 3 for 3 to the downside. And that's a little bit of a wedge breakdown as well. So we're going to go pure NA here. And we're looking for either a retest and breakdown off of 163 or a breakdown here under 159.50. Fantastic. And then VIX, right, hanging out 21.07. So we should have quite a bit of leg still left here in this move. And we'll see if we can basically get some enthusiasm here to show up and really break out. Any questions here, team? Everything makes sense? Any questions? Any questions? All right, so no questions by the sounds of it. So I'm going to go make myself a quick cup of coffee, spend a few minutes here visualizing a successful trading day, and then jump back on here just before market open, and we'll dominate today's session. So be back in a few minutes here, team, and we'll chat then. All right. Any questions here, team? Plan makes sense to everyone this morning? Do we have a generally more bullish bias, more bearish bias? What's the slant? All right, so generally, right, we're looking for a bullish breakout scenario, right, or a trend continuation type play, as long as we can see decent volume showing up and bears failing in some context. Yesterday, although we got finally some separation away from that range, we didn't see basically that move happen on a significant amount of volume. So a lot of what we could call that price action there yesterday is like a little bit of like a positioning trade. So we want to make sure that that isn't the case, or wasn't like the trap position right before CPI. So let's see basically where enthusiasm shows up here this morning. If it shows up with conviction in either direction, especially on an impressive volume standard, then that's when we start to get interested in basically price action here today. So I'm not going to rush anything. I'm not going to force anything. I'm not going to do anything here that maybe compromises what was a nice bounce back day there yesterday. And it's just basically about waiting for markets to give me a consistent sign or a consistent signal before I'm willing to be very aggressive trading. Across the board, right, from our leading names, we're getting a lot of basically weak trending price action as well. So we've had a couple breakouts. We've had a little bit of some names maybe still stuck in some consolidation patterns. But across the board, we're still seeing that lack of like a super consistent narrative. So if that's the general thesis, right, it's hard for me to assume that I'm going to get this like immediate trend day breakout on the indexes if the leading names really aren't cooperating here in the meantime. And then from like an economic calendar perspective, although we don't have, or at least I don't remember if we have any further news here today at 10, but we do have a lot of Fed speak. So, you know, generally a day or a morning packed to the brim with those Fed speakers is really interesting, right? From like a juice or speaking fees perspective, but very uninteresting from a let's get a ton of easy price action perspective. So let's wait for the narrative to sync up here, become consistent, and then when it does, we can jump back in and take advantage of whatever price action sets up our way here today. Any questions? Any questions, team? Any questions? Yes, no, maybe. Chat's dead here this morning. What's going on? All right, cool. So better volume. 8.7 on NQ versus 7.6. So decent volume standard there. Let's see how this thing behaves. Good morning, Dwayne. How do you guys like these volume candlesticks? How do you like them? It's basically just that the candles will be different sized width-wise based on how the volume shows up. So if I just look at normal candlesticks, right, it's pretty thin. Obviously, the volume still sticks out like a sore thumb, but this just makes it just a little bit more obvious over how like enthusiastic the buying pressure or selling pressure is. So what it does is it just makes it easier for us to visualize. Is this volume bigger than the previous day in a slightly less scientific way? But like I'm a relatively visual learner, so it kind of stands out nicely here. Again, it doesn't change the price, doesn't change the candle shape vertically. It just makes it either chubby or skinny, right? And so if we're going to be visualizing like low vol pullbacks, I think that makes it really easy to see it as well, right? If you're looking for high vol breakouts, right, again, makes it very easy to visualize that as well. So for me, that's kind of where it's interesting. Like crude, we can see already at the open here, right? Not a very enthusiastic size, right? So again, being very patient for now. No reason to be very aggressive. This volume indicator here at the bottom, or these candlesticks, Steven? Which one? So it's just the candlesticks. So if you click up here, they're called volume candles. So if do you want, I'm confused by what you're saying, right? The bottom is still always just volume, right? So that's just this, right? It's just volume. The different candle shapes are called volume candles, which makes big volume look bigger horizontally so that it stands out more. So I'm a little bit confused by the way that you phrase that. Early doors, ES selling off here, but not on an impressive volume standard. We're looking for a fake out around, this trend line, right? So 5803, I mean, even off of this 2R range could potentially be interesting. So we got a little bit of work to do. Yeah, no worries, Patrick. Glad to see you in here, man. For now, NQ holding up a little bit better than ES. Let's see. But yeah, it's been a relatively muted start to the day, so not too much for me to yap about here as of yet. So I do apologize. There's not too much going on here yet. So what's the difference here between this ES possible fake out versus the one that we talked about on NQ yesterday, right? What's the difference between this fake out scenario sorry, it was a 5 minute. So this fake out scenario and this ES, right? Fake out here through these lows. What's the difference? Any ideas? Any ideas? Nope. So the difference here, right, is on this 5 minute fake out, look at where this candle closed, right? So if we're seeing that this is the low of our confirmation candle, this fake out closed back up above that confirmation candle's lows. If we're going to call this a fake out here, under this reversal, it's not closing above those lows, right? It's closing under. So bears still reclaimed control. We can't actually say that they faked out. So although the candle shape looks similar, they didn't actually give us the same profile because they were able to hold under that barrier. Does that make sense? All right, so the fake out has to recover back up above that confirmation candle low. Can't close under. And again, very slow start here to the day. I talked about this a little bit last week. But what I'm trying to do, right, is control my energy to a certain extent, or control my desire to be like an entertainer inside the stream. Because when I'm trying to be like super exciting and all this kind of stuff, well, the most exciting version of that is being in a position. So if price action is slow, then I'm going to be slow as well. Well, it just means it's not a fake out, right, Bruno? So if I'm saying that this is a, here's my confirmation, okay, this is a hypothetical, right? So pretend that it wasn't an ORB setup. And my idea here is I want to see a fake out or bears fail under, right, this low, or attempt to reclaim control and be unable to do so. If the candle closes under that confirmation candle's lows, then it's not a fake out, right? that's invalidating that confirmation. Whereas on NQ yesterday, right, here's your confirmation candle low. You get a fake out under, but it closes back above. Then you see bulls reclaim control at that 1510, and it's basically a straight line higher for 100 points, right? So it's not a fake out if it closes under. Has to close back up above. Well, Patrick, there's going to be about 3 seconds of latency with the live stream versus what happens right inside your personal accounts. So there's about 3 seconds of latency. Okay, so ES, not that much space there on our time frames, right towards like that 5808. NQ may be a little bit more interesting. Yeah, I'm watching here, right? So we have a possible confirmation signal here to the downside. Let's see how this 5-min candle closes. 3-min, too aggressive in my opinion. Good volume, but not great volume. So NQ on the 5 has a chance to be biggest of the day. And for me, that would be interesting. It's 9:49. That's okay. Okay, so stop loss would be 23.15.75 as is. Let's see how this behaves. It'll have to be more. Okay, so it has to be 344.50. And you're looking for an entry above 320.25. So let's see here. It'd be a 1 contract play. All right, so I am in average price 23.26.25. short. Right? It's a big red candle. This should not look like a long to you, Eric, right? Big red candle, big bearish breakdown. Stop loss is at the high. White line is at the lows. That is a textbook bearish setup. Got stopped. So if you're late to the session, I mean, that shouldn't be the excuse, right? You should still be able to understand what our setup triggers are here, right? So if we're looking for confirmation that looks like this, and you see a candle that looks like this, I'm not sure how that makes you think that it's a bullish scenario. So we have to be able to apply context, right? That's very, very important. So if you don't have time to review the chart, don't rush into a decision there, right, to then take that trade. If you're not prepared for it to be basically setting up, then that should be a trade that you avoid and don't take, right? We're going to be patient here, team. Just be patient. Okay, so for now, down like $360 here on the session. Fine. Is he asking me breaking out here on volume? Okay, so ES looking interesting here. Either the pullback scenario, right, or the aggressive entry scenario. Aggressive would be better. So stop loss, 827.75. Okay, see how it holds here. Okay, well, there we go. So now 826.25. And if it doesn't give me on the 3-min, right, an appropriate reaction here at this area, I'm happy to just trade this on the 5. And then you're looking for an entry under 829.50. So we want to see a little breakout back up above and then a weak pullback. And that would be a 3-contract position. Stop loss might actually have to be a tick lower, 825.75. Correct, Patrick. Yeah. It's just whatever the default setting is. I don't change things up. All right, I'm going to wait for this on the 5. So maybe it is ended up being NQ here. Huh. Yeah, a little bit of a fight here so far. That looks like a rejection. It's maybe a little bit starting to feel like a short again here, right, on ES. Stop loss would have to be high of day. So still need a decent pullback here into that zone to be interesting or to get sizing that you want. Okay, so watching carefully here, again, a high vol rejection or a nice rejection around this like 827 area starts to get interesting. Okay, so watching closely here. Depends on the entry price, right? An entry price of 26, right, means you're risking about $700 with 3 contracts. So you would need to be thinking about your max loss number, Jared, right? So my max loss that I want to stay within is always $500. So if you want to get 3 contracts, you have to wait for a deeper pullback, right, to justify that sizing. Or you size down so you can be more aggressive with your entry timing. So you're risking $500 with 3 contracts at like $827.50, right? So I need everyone to be doing the math for themselves here over what their max loss number is and what kind of risk they're comfortable taking. Because that number is going to be different for you. It's going to be different for me. And I need you to understand the why behind those decisions so that you can basically feel confident, right, with your entry timing. So still being patient here, right? Still being patient. It's kind of looking more like elevator up, right, than stairs. Especially with NQ making highs. Highs on poor volume, but still highs. Yeah, I'm just going to watch, right? We're going to wait. So remember, guys, right? When we're thinking about setting up our execution, the first thing you're asking yourself is, what's my max loss number that I'm willing to accept per trade? If I enter at this price, am I above that price or am I below that price? If I'm below that price with 1 contract, you can buy more contracts. If you're above that price, right, or above that number with 1 contract, you either wait for a deeper pullback or trade micros. But that has to be the process on every single trade. It's always asking yourself, not how much am I going to make? It's how much am I going to lose? right? And if you're not happy with how much you're going to lose, either avoid the trade, size down, or wait for a deeper pullback. Please don't rely on me to tell you how much you're losing. That's not fair, right? Because that's going to be a different number for all of us. So the best traders are not obsessing over how much they're making. They're obsessing over how much they're losing. And how you react to a loss is going to be different than how I react to a loss. And everyone has a number that sets them over the edge. So I need you all to be incredibly selfish over what that number is and to decide for yourself over how to size your positions around those areas. I can't make that decision for you, and I refuse to do it. So I tell you what my max loss number is per trade. I've said that 1,000 times. I'm going to take a max $500 loss per trade. And so with that information, you should be able to deduce yourself over how much you're going to lose or what my plan is going to be from a position sizing perspective. But I need you all to be understanding what your risk is and not skipping that step, right, and getting greedy looking for that information. Because that only ends one way. For me, it's the single most important thing, right? That everyone understands the risks that they're taking with each individual trade and makes those risks unique to them. When you take accountability for that and you understand what you're doing, you're going to feel a lot more confident in your position than if you're just trying to be me, right? I'm not trying to be Patrick. I'm not trying to be Eric. I'm not trying to be anyone but myself. And every decision I'm making is based around me selfishly protecting me from my worst traits and the worst versions of myself as a trader. So every decision is based off of that, right? So I need you all to also be making those same selfish decisions and protecting yourself from the worst versions of yourself. Is that understood? Okay, so that maybe is the fake out scenario here that we talked about. We want to see this candle now close red. If it closes as a high vol breakout here, right, then that starts to tell us a scenario that, hey, it's a reversal to the upside. We're going to be patient here, Patrick, right? We haven't gotten close to pulling the trigger here yet. Price never behaved like we wanted it to look for that rejection. So we're buying ourselves more time to make that decision. Look, not every setup is going to be a trade, right? So we have a setup trigger. Doesn't mean we have to just trade it just for the sake of getting something off. Okay, so NQ breaking out, increasing outlier volume, red to green reversal. Fake out off of 2300. So I'd say we have maybe more of an upside scenario here than a downside scenario. Okay, let's see how this thing behaves on a pullback here. So stop loss at the moment would be 397.25. So one contract is risking you from this price, right, about $160. So I could buy 3 contracts, right, and still be within my max loss number. So what am I doing, right? I'm finding out what my stop loss is. I'm calculating how many points from my stop loss to my current entry price and saying, okay, is that number more or less than 500? And then go from there. Right? And if this thing continues to pull back, then you go stop loss like 377. So now stop loss 394.75. Lower again. It's a bit of a fight here at this psych level. So now 392.75. So deeper stop loss, right, means I need to size down. If I'm playing it off of, say, a 414 entry, and I buy 2 contracts, well, I'm risking $870, right? That's too much. So before I ever feel like I need to enter a trade, I'm always understanding what risk I am taking on. I have that number in my head. How much I lose should never feel like a surprise, right? And if I'm not happy with that number, I either wait for a different entry price, right, so that I get a tighter, deeper pullback and tighter stop, or I size down and play a smaller position with a larger stop loss. So again, we should never be surprised by how much we make or lose in a trade. If we are, then we're being greedy, right? And we're not trading our system. Everything is built out from risk management first. Everything. So if we're not accepting and calculating our risk management before we enter a trade, we should not be entering that trade. And these are the things that send me off on tangents, because these are the single most important thing that you can do as a trader. There is no excuse over not knowing, right, what your risk is. Straight up unacceptable. Does everyone understand? Okay, so what's 12 times 20? Who's got the math? What's 12 times 20? $240, right? So is 240 less than 500 or more than 500? Is it more or less? Simple question. Right? So if it's less with one contract, and I go 240 times 2, what's that number? That's 480, right? It's 480 less, right, than 500 or more than 500? So I know, right, that if I get an entry then under 2404, I can buy 2 contracts. Any entry above 2404 and I'm buying 1. That's how simple it is, right? So if you're not doing that calculation before you enter the trade, don't take the trade. If you don't know the risks that you're taking on, like you wouldn't redo the bathroom in your house and hire a contractor without getting an estimate for what the work and material is going to cost, right? Because then when he sends you the bill, you're going to be surprised either way. You're going to be like, oh my gosh, what did I buy? How did this bathroom turn out to be $50K? So why would you be willing to take a trade, right, without getting that information as well? So possibly setting up here ES on the downside, right? Here's your setup candle, fake out above, fake hold under, and now pulling back. Six points of risk. What's 6 times 50? $300, right? So you buy 1 contract. 2 contracts would be 6. And then 5 points, right, would be 250. So if you have a 5-point stop loss on ES, you know that you can buy 2 contracts. If you have more than 5 points, right, you're buying 1 contract. So it's that simple. The math is not complicated here. Like, I'm not some algebra expert. I'm not doing anything crazy. If we're not taking accountability on our own risks, we do not stand a chance. Not a single one. Like, we can't allow our greed to make us ignore our risk management. The amount of times I've seen people buy 20 copy trading accounts when they're 1 loss away from blowing their trading, it's crazy to me. right? Everyone always thinks about how much they're going to make, but they never think about how much they're going to lose. And that's why 95% of traders long-term don't make any money, right? Because they might win, but when they're not thinking about their size of their losses always exceed the size of their average win. And so they create no margin for error for themselves. And then they get punished. They lose a tremendous amount of capital. They feel like the market is rigged against them. And they look to blame everyone else but themselves. So how do you solve that problem from a first principles perspective? Is you determine and accept and write down, okay, here's my max loss number. Now let's gamify losing less than that number. If my max loss number on a trade is $500 and I lose $300, that's actually a good decision, right? If I lose $489, that's actually a good outcome. So stop trying to gamify winning as big as you possibly can. Start gamifying losing small, and you'll see a tremendous difference in your trading results. Okay, so still watching here for potential short. Look, that is the thing that I'm singularly most passionate about as a trader, right? If you choose to ignore your risk management in pursuit of fast and quick gains, the market will take all your money. Guaranteed. And I promise you guys, like I'm good at trading, but what I'm excellent at is my risk management, right? I am an excellent risk manager. That's why I survive. That's why I make money. And risk management is not some technical skill. It's literally just a choice. It's a set of priorities, right? So you either prioritize losing small and managing your risk, or you're prioritizing losing everything. For me, it's that binary. Because not only have I seen the horrible consequences of my own personal trading account when I try to optimize for massive wins, but when I worked institutionally, I saw how quickly people would get fired if they chose to ignore their risk management. We spent months and months and months hammering down those principles. And it was made very, very clear. If you choose to compromise those ideas, you will be out of a job very quickly. It's not really for me, right? It's not really for me. Still interested in a short here. I'm just trying to get my entry price. All right, so I'm in. Average price, 58.29 short. 5 points of stop, so that means 2 contracts, right? Okay, so far so good. So far so good. Let's see if we can get a bit more further follow through. Break down under that 24.25, and then we're in good business. So let's see if this thing can keep breaking down. But again, good shape. Would like to see it make lower lows here under this 24.25. That's the starting point here for any continuation. If it can't break down under that area, then I'm going to look to get out and just take my $300 win. If it does break down under that zone, then I should have a decent expectation of at least testing towards that 820. So let's see if it's got the legs. Okay, so a couple ticks to go here. Let's see if it's got it. And so why did I pick my entry price, right? You might be asking. Well, I chose my entry price because then I could buy 2 contracts. Right? So that 329 area was 5 points from my stop loss. 5 times 50 equals 250. 250 times 2 equals 500. Okay, good little breakdown under. Let's see if it can hold. There's 500 bucks. So let's see if it's got the juice. Maybe didn't like that it didn't hold under that area, right? I would say, if anything. So buy myself a little bit of time here. Come on. Okay, so that's 6 points, right? What's 6 times 50? Who could do the math? What's 6 times 50? $300. Exactly how many contracts do I have? It's 2 contracts, right? So it means P&L was $600. So up 300 bucks on the day, right? Approximately. Again, P&L should never be a surprise, guys, right? When you're surprised by your P&L, that's when you go on tilt. Because you're never going to be surprised by a number that is less than you expected, right? Never happens that way. right? And when you're surprised by your P&L, you're surprised by price action, you're surprised by your risk management, then you stop thinking rationally and you start thinking emotionally, because your first reaction is, oh, I don't like this number. Let me get a different one than that. And then you take a trade that is purely for P&L purposes, right? You size up too big on your next one. You do something far too aggressive in that next decision, whatever it might be. And so you go from being rational in your decision-making process so this, Aria, if you go into the Discord, I talked about the chop entry rules the other day, right? Yesterday morning. So here's the idea. On high volume separation away from the range, look for a bearish failure at or under the candle's high. So in this case, look for a bullish failure at or under that candle's highs. Look to enter on the first red candle post fake out under the stop loss. Look to place your stop loss at the fake out high. So here's our fake out, right? Above high of day. Then here's that bullish failure, not being able to close back above that confirmation candle's high, right? So we closed under that 830.50. Here's that first red candle post bullish failure. So we're playing a version of this fake out trade, but we waited to see bulls fail post bearish fake out. And this is, again, the same example of the trade that I posted yesterday afternoon, except of it being to the bullish side, it's to the bearish side. So the information about this has been shared in the Discord already. Please review that material. What price would be the trend line, Ben? What do you mean by that? Well, for now, I'm willing to let this keep grinding lower. Every candle we've seen here so far has made lower lows and lower highs. So I'm trying to give this a little bit of time and space here, Jack. Or as much as I can. So something like this. Yeah, I mean, that would be a reasonable thesis for a reversal. I still think this has more juice. So now again, back to 600. And it's a green day, right? And why is it a green day? Because you managed risk appropriately on that first trade. Kept that loser very small, right? All things considered. And you kept yourself within one win, right, of being back to green. So everything we do, right, built out from a risk management perspective first. If you ignore your risk management, you ignore your chance to make money. All right, come on, don't do this. Come on. Okay, and then no panic here yet, right? Still in this. Didn't feel fun seeing it retest, but still in this. Come on. Aria, do you understand the thesis of this trade now? Yes, no, maybe. And all it is, right, is you study your entries inside this choppy price action. You see that your thesis is correct the majority of the time, but you get faked out under your stop loss, and then it goes in your favor. So this is a way, right, of correcting for that. And that is all this is a reflection of. Right, so you're basically making your previous stop loss your entry. Come on. Let's go. We've survived an entry retest twice. If it can't break down from here, that's not going to be a good sign. Come on, come on. I need it to break down under this. Ah, come on, come on, come on. Everything looks to be pretty sticky here. Oh, give me a little flush. Come on. Wrong way. Come on. Give me a flush. NQ back under 24. Right, so we're losing the psych level there, I think, which is a good sign. Let's see if we can get continuation breakdown here. Still want to get under that 2250. It doesn't want to cooperate super easily here. So profit target is this 5808. So red line stop loss, anything above green line entry, white line profit target. If it stops behaving the way that I want, I'll just close my entire position. Starting to wrestle with that idea a little bit because it's taking a long time for this move to develop. So is that just a symptom of a slow market or a wrong thesis? Let's see if we can get a big flush here. Right? So what's 7 times 50 times 2? Who's got it? Yeah. So nicely green on the day here, right? Up $700. Let's see if this thing can continue to break down. Taking a little bit longer than I want, right? It's making me fight just a little bit. We can make it if we try, right? But just a little bit here. And then the next point of resistance that we want to see break under is this 820, right? Which is our confirmation candle low. So let's see if it's got the juice. Now 9 points, right? We're in good shape here. I'd like to see this candle close and hold under this red line. If it can't, I will get out. So 15 seconds, needs to hold 22.50. Now flush, come on. As we bounced right off of that 820 area. So I want to see it now break down through there with some enthusiasm if I'm going to have conviction that this is going to continue to break lower. We've still not seen incredible volume show up post-entry, but price action has behaved fine, if not just a little bit slowly. I'm going to push my stop loss now to be 825. Stop loss is now at 825. Okay, good shape here though, right? Good shape. $1,000 day. Can't complain about that, right? And what I have in my notes here, so you know me, love my notes, is that I have felt relatively calm. Calm for my sake. Well, that's just what the trend line is at, right? So the trend line is approximately 825. So we've seen that act as resistance here. So I'll just continue to do so. And then 4 times 50 times 2, right? It's about $400. That ensures I finish green on the day if I get stopped out protecting entry, right? So again, if that number is different for you, be selfish, right? Don't allow it to be a surprise. But what I have here in my notes, just go back to my comment there. So good entry on the fake out technique. Green almost right away. Cool. Moved very slowly post entry. Retested entry twice before going back down towards 24-ish. Felt calm on entry retests. So that's a good sign, right? Felt like I've been in control the whole time. Don't have many feelings of anxiety, right? Okay, trade is moving slowly, more slowly maybe than I would love. But there's nothing here that is shaking me out, tricked me into making a decision I don't want to make. I've done a relatively good job here, right? Trusting my thesis. So those are all positive check marks for behaving the way that you say you're going to behave. And you're reinforcing that behavior by basically not only noting how you feel, but also then executing those behaviors, right? So here we go, right? 9 points. It's a good day. It's objectively a good day. Again, lower low, lower high. Would still like to see this close under that 820. Don't like the little fake out there. That makes me a little bit nervous. Come on. I want to see it flush through this 820 here. Do it. I don't want to see 820 continue to act as like a half-baked level of support. The more aggressive we can make lower lows, the better I feel about my thesis, right? Nice work, Jeremy. Congratulations. Well done for managing your risk like a pro today, man. That is fantastic. That is literally the thing that gives me the biggest smile on my face. Because when you manage your risk well, you can solve every other problem you have in your trading. So, really, really well done, Jeremy. Proud of you, man. Come on, keep going. So again, back to $1,000 here. Did not make a lower low. So I'd like to see that happen, and with aggression. Otherwise, I will take my win and move on. All right, we've been in this trade for a while now. About 30 minutes, right? So let's see if it's got the juice. Yeah, beautiful, Jeremy. See, that's easy. Easy solution. right? Now, the math, to be honest with you guys, is not complicated, right? It's 50 bucks a point on ES, 20 bucks a point on NQ. So we should all be able to do that relatively simply. Like I'm not, like I said, I'm not some math genius, right? I'd like to see this thing close under 820. Come on. It's two candles that didn't quite behave the way that I wanted. Got like those spinning dot circles running around my head trying to think. I think just the fact that it keeps getting stuck. All right, guys, I'm out. Closed at 824.50. That's a little bit annoying. So again, in my notes here, couldn't close under 820 on 2 candles in a row. Couldn't find the courage to close and take the win. Still green on the day, but choppy. So it's definitely the right decision to close it at that area. So about $100 win on the day. About 500 bucks total. But that's all right, right? Puts me green on the week. Will not complain. All right, so my notes for today. Slow moving market day. Slow moving market date without clean follow through in either direction. Played fake outs above the opening range on both plays here today. Short NQ at 20, 326.50 with the stop loss at 344.50. Got stopped out almost right away as price action couldn't break down under my lows. Second trade was much better. Played ES to the downside on a 5-man fake out setup. Waited for bulls to fail on a fake out above my confirmation candle high and closed under that range. Then, once bears had reclaimed control with a red candle, I looked to enter the play short. Got in at 58.29 with 2 contracts with a stop loss at 34. Had a good entry and was green almost right away, but price action moved slowly and without a ton of volume supporting my thesis. It retested my entry price twice, but I felt calm both times before it sold off towards 24. It then broke down under 820 twice and couldn't hold that level both times. I couldn't find the courage to close it on that failed breakdown under my confirmation candle low, and ended up closing the trade as my P&L was decreasing. Bad. Need to take my wins and not get greedy. Still holding on to a bit of baggage from the chop of last week, and that's costing me $700 a day per account. So all in all, not the end of the world with how I traded here today. Left probably a little bit of money on the table, right, with that decision, but still green. So I will take that, right, every single day of the week, and just feels good, right, to be compounding green days here again after a little bit of some challenging price action there last week, right? So I'll take it. It's not always going to be beautiful, not always going to be sexy. Should have been probably a little bit more green than I was. But hey, green is green. I'll take that all day long. Any questions here, team? Any questions? Any questions, team? Any questions? Yeah, we'll take it, right? Green 2 days in a row here. Not really going to complain about that too much. Should have been a bit more today, but that's something to think about here later this afternoon. So final call for questions here, team. Final call for questions. No questions, team? We're all good? So here's our setup, right? Confirmation was failed breakout above setup high. Right? And then entry was 29. Make sense? Yeah, just did, Brian. Just did. So it's a fake out above the opening range. We've been chopped out on fake outs for the last 10 days. So just wait for that fake out to fail, right? Well, what are you talking about? We had outlier volume here. Right? So we had outlier volume on our setup confirmation candle. What we care about is that then when we make a higher high above that, bulls fail at that attempt, right? So it's bearish failure, low vol pullback relative to this candle's high, right? And then confirmation that bulls aren't in control when they make a higher high, break down under, can't hold above 58.30, 50 or whatever it is. And then you have red candle confirming that bears are back in control, and you can look for a continuation. So again, we're not revolutionizing our trading here. It's just we're waiting for evidence of bulls failing first instead of assuming that they've already failed, right? So it's not this like dramatic change. It's okay, what does a bullish failure look like if we've been getting faked out here recently? Well, a fake out looks like this, right? We see it make higher highs and then sell off after our signal. So why not just wait for that to happen and then jump in and play the trade, right? That's literally all it is. So what has price action been doing to us? Well, it's been faking us out and then running in our direction. So do we have to accept each fake out and lose money on it? No. We can correct, right? Define what a fake out looks like, which is a failed breakout above our confirmation high in this context. And then, right, look to enter your trade with your stop loss at the bullish failure. So now in the Discord, you should have both a bullish example and a bearish example of this trade. And again, I should not be confusing, right? Very, very simple. Same concept as this low vol fake out, right? So it's a low vol fake out / bullish failure. All we're doing here is fake out plus bullish failure, right? So it's just a slight little change. That leads to green, right? All right, final call for questions, team. Final call for questions. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Otherwise, have yourselves a fantastic rest of the session. And I'll be watching at Power Hour again here today. So if something sets up, I'll pop it in the Discord and let you guys know. But we'll see if I aggressively trade that or not. So have yourselves a great session. Looks like it's just going to be an inside bar / day of consolidation. So no reason to rush or force anything here. So yeah, have yourselves a great day, team, and we'll see you tomorrow.